of the town.
We have a very distinguished set of panelists which actually need no introduction. The objective of this session is to kind of explore what Nepal needs or can do to scale foreign investment, building on the momentum that we've already had. But how far can we go? Where can we go? What are the challenges that stop us from reaching where we need to go? So I would like to take the panelists one by one, just to give their initial reactions to the presentation. And please, over to you, Simon, first.
I do think also we need to, and this is particularly sort of a reflection for BII Plus, the technical assistance facility that I lead, and as we think about these market creation programs like Invest for Impact Nepal that we're co-funding together with our partners FMO and SDC, we need to take a long-term view, right? We're sort of, we started exploring work around this, around Nepal in 2020. The initiative formally launched, I think, in 2022. We're now 3 years into that. We do need another phase, and I think it speaks to the timelines that are required for markets to develop. And I think it really does require a holistic approach. You know, we have a lot of internal debates about whether a DFI and even a technical assistance program that's funded by DFI should be getting into policy reforms and advocacy, and where is the line with what bilateral donors tend to do. I think we've been very successful in very sort of pointed interventions, if I think about the lock-in periods that have been reduced, but also, as Mr. Dillips pointed out, there's a need for further reform, and I know that's a big priority here for the government as well when we talk about taxes, foreign currency hedging, etc. So that's something that I think the Invest for Impact Nepal initiative can continue to push, alongside the investment readiness for specific transactions, and we've done a lot of that in recent years. But I think I'd love to see more of that, even beyond the financial services space, looking at other sectors moving forward.
Surendraji, I think it'd be interesting to get a banker's perspective.
Actually, indirectly, based on the total deposit of the commercial banks and the liquidity the position and the regulatory requirement in our context, indirectly, we may have some, option of having some hedging indirectly by the bank itself. And the third one, I would like to say, the last point, maybe the comment one has, the major critical factor, as he has also mentioned in his presentation, is, the pricing. In terms of pricing, I mean, sometimes, the external commercial borrowing pricing is a bit high than the local market. So at that time, scaling of this external commercial borrowing by the commercial bank would be a bit difficult. So, and here are a lot of, DFIs here. So I would like to request to have some sort of, flexibility in, pricing. We are already paying so far, but the margin is a bit high in terms of commercial borrowing, and then the cost of the bank would be a bit high, and it will impact on the profitability of the bank. Therefore, these points to be considered while, making a deal on external commercial borrowing. Because I'm emphasizing on the external commercial borrowing is that, when he has presented the data, I mean, most of the foreign investment is on bank. External commercial borrowing is on bank. Therefore, it has to have some sort of, mechanism to fix pricing at par with some sort of, the local market. And then it will help to enhance, to extend the foreign investment in Nepal, especially in terms of banks and financial institutions. Thank you.
Thank you very much, Surendraji. So Ravikat, we're at, we've gone through an ecosystem builder, a bank. IFC's been here for a long time, supporting all sorts of investments. I'd like to get your kind of take and what you're seeing going forward.
We have done very well in terms of foreign investments. From the presentation, it's clear that the number of investors has increased from 1 or 2 odd investors to 12 investors now, whereas the number of investees has also increased from 1 or 2 odd investees to 6 investees now. So we've come a long way. We've done really great. And this would have not been possible without regulatory interventions. So we are very thankful to Nepal Rashtra Bank for the policy reforms that they have brought. For instance, just to give you some examples, NRB was quite proactive in transitioning from LIBOR to SOFR in January 2022, right? That was one. The other thing, as IFC, we did a small exercise within ourselves. We took the external commercial borrowing guidelines, the ECB guidelines of Nepal Rashtra Bank, and compared it with a few jurisdictions of same nature. And fortunately for us, we found out that our ECB guidelines are quite comprehensive and up to date. And some other jurisdictions are actually taking inspirations from our guidelines. The recent example is the example of Bhutan, where they have come up with their ECB guidelines, and they've taken a lot of inspirations from NRB ECB guidelines. So we've seen the success story. It's because of these regulations. But everything said and done, well, we are not here to only celebrate success, but we are also here to see what better we can do, because we'll all agree that the biggest room in the world is room for improvement. So next time, probably 2 or 3 years down the line, I know it cannot happen overnight, of course. It cannot happen overnight, right? But slowly with those regulations in place, maybe in 3 or 4 years down the line, when Mr. Arno will be presenting again, maybe in graph not as big as debt, but maybe we'll have a graph for equity as well, hopefully. So equity investments, there we need to do a lot of work to get equity investments right. That's number one. And again, the second point that I would like to highlight is innovative financial instruments, right? A lot of debt that you see here is plain vanilla straight senior loans, right? What about the innovation? Capital market transactions, thematic bonds, green bonds, social bonds, sustainability bonds, right? There's a lot that we can do. Structured finance transactions, right? Risk-sharing facilities, securitization, covered bonds, diversified payment rights, DPRs. It's not that we don't have regulations for all of these. We do in bits and pieces. But if we do have the regulations, they need to be nuanced a little more, or you need regulations for a few more of these instruments to come into play. So I'll stop there. These are some observations that I feel that will help scale up foreign investments. Thank you so much.
Thank you very much, Ravikant. The man sitting next to you is probably no better qualified in this country to talk about equity. So, Siddharth, I think your ears must have been ringing when you heard what Ravikant said. Yeah, you're on. And I'd like to get your reaction.
If you really are willing to push the needle, you need equity investments in economies like this. You need patient capital. You need intervention in the form of ESG and climate smart approaches. You need to have that transformative change, and that can only happen if you have equity investments. Furthermore, ESG investments are so important nowadays that you mentioned. That cannot happen. You need to have technical TA funding for that. The companies that have our investments cannot afford it. The balance sheets cannot, SMEs cannot afford that pivotal change and that hand-holding mechanism. So all of our investments pretty much have ESG intervention and climate smart approaches. Especially right now, every monsoon we see enormous destruction that happens. And most of our companies have insurance. So that is basically resilient adaptation. And when that happens, they would not have had that sort of intervention if we hadn't come in. So we are assisting these companies and economies like this. You need to handhold them. We've been doing this for 10 years, but it's been a few years only that the banks have started to incorporate ESG measures. But they need funding from outside as well as technical assistantship, because even the banks can't afford this intervention. So this is very important, and DFI equity investments are the only way forward. it's not only resilience from the part of the investors, our LPs, it is also resilience on the part of our investees. And the DFIs understand the risk that is associated with economies like this. And to tell you frankly, I must give credit to all the DFIs who are involved in some of the funds here who have actually helped push the needle. I hope they transform from debt into more equity investments as we move forward. There's a lot of opportunities here, and especially economies like this, if you do not do equity investments, we have proven that you can get a good return on your investment, as well as have an impact with it.
So I'd just like to ask Dilip, your take on the presentation and your comments.
Of course, Nepal is, the business climate in Nepal has improved over the years, but it still is very challenging. So finding good companies to invest in from a foreign DFI's perspective is difficult. But at the same time, I think there are many companies that need to be encouraged to prepare themselves for investment by DFIs. And there's a lot of talk here about ESG. ESG is not something anybody would want to willingly do, because it's costly. And in a competitive business climate, why would anybody invest in something that may give a return over the long term, but in the short term is just adding to complexities and costs? So there needs to be something to induce companies to adopt ESG measures and prepare them for investments by DFIs. This could be, I think, towards this, funds like Business Oxygen and Dolma have done a great job, finding these local companies, investing in them and preparing them with ESGs for further investment by larger DFIs. And of course, the issue of exit is of course there. That's like the pink elephant in the room. Without a proper exit, no foreign investor would want to come into Nepal. Nepalese investors continue to invest in Nepal because we don't have any other option. If we have money in the bank account, we have to invest it somewhere, whether we get an exit or not. But for a foreign investor, coming to Nepal is an optional, and they would go to an economy where they have a better chance of getting an exit. For example, south, to go to India, and invest and get an exit. So those are my initial thoughts, and we can discuss more in subsequent rounds. Thanks.
Thank you very much, Dilip. Let me come back to that. You've made a very, very interesting point, Dilip, about exits. I'm going to bring it back to Siddhant now. And, we talk a lot about investments. We talk a lot about equity. You were the chairman of the Nepal Private Equity Association. You run one of the earliest DFI-backed funds. But we talk about exits. How have you been able to exit? What's the source?
Exit is always on our mind from day one, from the investment process. So we ensure that the exits happen and is programmed, and there is enormous contact with the companies that we've invested in. In the 5 exits we made, 4 were basically sponsored buyback, and the 5th one was strategic investor. And surprisingly, 2 of them happened during the midst of COVID. So, and all of them were profitable. We made IRRs on our investments, some more than the others, but the principal and a few dollars more. And we've also been able to repatriate that back to our investors. Now, how does this happen is patience and advocating and liaising with the different government agencies. I must thank Nepal Rashtra Bank. In our last repatriation, they took less than 4 days, 3 days to give us permission. And that was amazing, because there is now, after almost 6-7 years of investing and exiting, we have now been able to create a rapport, and they know what we are all about. And private equity is now a mainstream sort of word. It wasn't in the past. So exits in Nepal, maybe because our ticket sizes are small, it didn't have a big problem. I hear all these stories of how companies are having major problems in repatriating funds, but I'm speaking for my company, and we haven't had any such problems yet. Okay, I mean, we still have some more time to go ahead, but exits are not a problem. We've made 3 tranches already in different years back to IFC, which is our main investor. Looking at it, we structured our fund according to how it can operate. Self-liquidating instruments, prefs, common equity. The self-liquidating instruments and service charges and monitoring fees where we claw back from day one has helped as well in terms of keeping the investees on their feet.
Thank you very much, Siddhant. So Ravikant, I mean, you've invested in Business Oxygen. I'd like to kind of understand, where do you see the business opportunities and developments going forward? You took a jump into this when very few were willing to do that. So perhaps it's a good time to ask you where you see the new opportunities.
IFC, we are very positive about the developments here, the regulatory aspects, right? The regulatory interventions that have come our way, because the testimony to that is the investments that we have made since 2019 till date. The investments are over $700 million. So that in itself speaks that we are quite bullish about the Nepali market. Where we see opportunities today, some sectors that I can name would be tourism, hospitality sectors. Then you look at infrastructure sector. Within those sectors, it would be hydropower, solar, of course. And then you would have opportunities in warehousing and logistics. You would have opportunity in data centers. And then, of course, we want to continue supporting the micro and small enterprises through financial intermediaries, where commercial banks, the other class institutions, and funds come into play. So that's how we want to keep supporting. And not only in terms of the sectors, in terms of the products, as I stated earlier, we want to do equity with the right regulations in place. That is our mandate now. We also want to do something that's hybrid, quasi-equity, mezzanine instruments, right, which will help bridge the valuation gaps that exist. So these kind of instruments will be very important for Nepal's growth in terms of foreign investments. And something that I would like to add, last but not the least, is that we don't want to move alone. We want partners. We are very much focused on mobilization. If you look at the recent deals that IFC has done, almost all of them have been like including mobilization, right? We have introduced new investors to Nepal, and we have also had like parallel loans that we have done in Nepal.
Surendraji, I mean, you've been a very successful bank in attracting foreign investment. What can other financial institutions learn from your bank's experience?
We have been able to get external commercial borrowing from DFIs very easily, and then based on our experiences, maybe some takeaways to other banks would be something around, if you are availing, let us say, the external commercial borrowing, initially you will be in a position to implement the best international practices. Another, our loan portfolio would be diversified because, we do have some, impactful sector, and we do have some sort of, specific sector as to make us a sub-borrower and to invest that loan. And it will also facilitate to have a capacity building for staff. Not only for staff, it will enhance the capacity of the borrower as well, because DFIs are also very much interested even to teach the borrower and then to visit, to inspect the borrower's business, so they will be in a position to enhance their capacity as well. Side by side, you will have some technical help from this relationship, And then we'll be able to focus on impactful sector and sustainable development. And other takeaway would be digital transformation, fintech partnership, and the technology transfer. It will further strengthen the cross-border trade services. And more specifically, this relationship will further enhance the risk management and inclusive finance, as well as the advisory role to strengthen ESRM guidelines. Overall, I mean, the relationship, these external borrowings, would facilitate this sort of things, and we'd be in a position to go in a green financing, sustainable financing as well. And these are the takeaways to other financial institutions, and then even any banks and financial institutions who are not availing, I mean, external commercial borrowing, I recommend at least to have one tranche of deal, so as they will be in a position to, improvise their policy, procedures, guidelines, their portfolio, which will further enhance to increase the value to the bank. So I guess this will be the takeaways to other banks and financial institutions.
Thank you very much, Surendra. So that was from a bank perspective. Simon, you have a tremendous experience of working across investment ecosystems in the world. Just a simple question, but probably a difficult one. What does Nepal need to do to continue this scaling of investments?
I think for this next phase of the Invest for Impact Nepal initiative, we're looking to help mobilize over $1 billion in additional foreign investments over the coming years. And what are success factors that we learned from other markets? I mean, I think, as BII, we have a couple other of these what we call market creation programs, one in Ghana, one called ARIA, which we do actually together with FMO as well, and now Proparco is coming on board there, which looks at different frontier markets across Africa, Ethiopia, Sierra Leone, DRC, etc. I think, really there is no one-size-fits-all approach, I think is the honest answer. I know it's not a satisfying one, but typically we tend to do a very thorough sort of upfront market analysis to try and understand what are the specific bottlenecks in a given country, right, that we need to address. I think for Nepal, we've done that. We very much understand the landscape. We've heard a lot about what those bottlenecks are, whether they be at the ESG capacity building level, whether they be at the policy level, the investment readiness level. So I think we have a set of interventions that we're sort of keen to pursue over the coming years.
Dilip, we've met a few times. I'm always impressed by Worldlink's story. I'm impressed by how you've been able to get investors. So I have a simple question for you. What are you doing so well?
Well, I think there's a lot of effort and luck involved in the whole process, and we have always had a very long-term perspective on business, and because of that, we have always focused on internal processes. And even though we were not ESG ready the way BII wanted us to be, we were quite there, without even BII being there. And I think that is what kind of impressed BII to, besides the business being fundamentally good and promising, that's what I think got BII excited to look at Worldlink seriously and invest in the company. And I think we were willing to, we were open to change, and we were open to letting go of a lot of control, and we were willing to professionalize. We had already started maintaining clean books, which, mind you, most companies in Nepal don't have. And that is something that they were able to verify through PwC, and it came out clean. So I think those are the kind of things that we had done in the past to prepare ourselves for such an event. We did not expect a BII to come in and invest, but we were doing it just to professionalize and keep the company healthy for the long term. So it was that long-term perspective to run a good company that had gotten us prepared to be investment ready for a DFI like BII. And meeting BII was, I think, a stroke of luck, chance. A very good friend of ours, a mutual friend, Joseph, who was then CEO of Standard Chartered, he introduced me to Srini. And on the first call that lasted more than an hour and a half, I knew this was going to happen because Srini was so excited and he could feel my entrepreneurial passion for the company. Once Whirling got the BI investment, I think that put a mark of approval on the company, and that's how I have seen it. When I took BI's investment, I took it not for the quantum of the money. We didn't really need the money, but we needed the sign of approval, the stamp of approval, and that has helped us secure further investments. And so far, we have received around $30 million of foreign investment, and we are getting another 10 million euros from FinFund. And we're also in advanced talks with IFC for a debt funding. So I think once the journey starts, it rolls from there because you've already demonstrated that you are capable of meeting the investors' expectations.
Dilip, thank you very, very much. And Arno, if you could pin down 2 or 3 important measures for a bank who wants to go on an investment readiness journey, what would they be?
I do see the potential for Nepal to generate US dollars. And I think the market, which is very logical, I think, is export of hydro and solar. And to make that happen, that enormous funding gap is there, and Nepali banks can support with that, and international lenders can support with that. But at the moment, the Nepali banks are not yet ready to understand the underlying risks of these hydro and solar projects. So my recommendation to the Nepali banks will be to invest in this knowledge, to set money aside to train their people, to train the people on the ESG levels, to send their staff to a university to get an ESG course, to hire international hydro and solar specialists to teach their staff to understand that better. And if the Nepali banks understand that better, and they only give a loan to a local developer if all the conditions on ESG are met, that creates also a lot of comfort to international financial institutions. And then also the international loans will come up. So my recommendation will be to Nepali banks, invest in ESG.
Okay, Arno, thank you very, very much. I think we are out of time. I would love to have asked many more questions, but I would like to thank this excellent panel for some very insightful comments. So I'd like to thank you.
Talk of the Town.